Stop scrolling. What you're about to hear could change how holders of Iraqi dinar and Vietnamese dong think about their money. Right now, live trading activity for IQD and VND is showing up on multiple trading screens, and the reaction across forex desks and social feeds is loud, fast, and full of questions. If you hold either currency, or if you're watching markets for signs of a big move, this video will walk you through what's happening, why it matters, what to do and what to avoid, and how to be prepared. I'll explain the market mechanics in plain English, break down the practical steps holders should take today, call out scams and misinformation you must ignore, and give clear checklists for documentation and verification. Stay with me because I'll also show how traders and institutions are reacting, what volatility could look like next, and how this could affect your ability to exchange currency once official channels open. Don't worry, I keep everything simple, direct, and focused on what really matters. Let's get into it. Right off the bat, let's explain what live trading activity actually looks like on a forex platform in a way anyone can understand. When a currency is live on a major platform, that means price quotes, bid and ask spreads, and trade volumes appear on screens that traders use every day. Those platforms display charts and order books that update in real time. For IQD and VND, to show live activity means feeds are delivering numbers that traders and market makers can see, and sometimes contracts or limited trades can execute against those prices. That visibility is a big deal because it turns discussion into data. It doesn't automatically mean every bank in the world has opened up exchanges for retail holders, but it does mean the infrastructure, price feeds, valuations, route testing is being exercised by participants. Traders use that data to place bets, hedge risk, and update models. So when you see IQD and VND on live charts, think of it as the market switching on monitoring lights and letting everyone watch what's happening in real time. Traders reacting to a new or reactivated currency feed will often drive early volatility. And here's why that matters to holders. When a currency appears on screens, algorithmic trading systems and human traders start probing. They place small orders, test liquidity, and see whether large orders move the price. That probing can cause price swings because initial orders may be thin. There might not yet be deep buy-side or sell-side liquidity. For holders watching at home, volatility can feel like chaos. Numbers jump, spreads widen, and comment threads fill up with claims. But volatility is a market mechanism that reveals information about demand and supply. If you have physical notes tucked away, volatility on a screen does not mean your paper is instantly convertible at those fluctuating intraday prices. It does, however, suggest that market participants are actively pricing the currency and that official systems are doing the technical work needed before a broad exchange can be offered. So the headline reaction, sudden price movement, and excitement is precisely the signal that testing and market attention are underway. Let's be clear about the difference between live on forex platforms and official public exchange for retail holders. Platforms can show live quotes and even let institutional counterparties trade small volumes for hedging or speculative reasons. Official retail exchange means banks, central bank directives, and formal networks are set up to accept notes from everyday people and deposit equivalent sums into bank accounts. The former is a market visibility event. The latter is a legal and operational activation. You can think of visibility as the first step in a multi-step process. Price feeds and trading screens report activity. Clearing and settlement systems are tested. Banks finalize their verification rules and regulator sign-offs happen. All of these steps can take time and involve different players. So if you're holding notes, this is a time to prepare documents, confirm your identification and proof of ownership, and avoid assuming that you'll be able to walk into any bank tomorrow and exchange large quantities without prior notice or additional verification steps. If you hold physical IQD or VND, your immediate practical checklist should be simple and focused. First, secure your notes in a safe place. a locked safe, or a secure bank safe deposit if possible. Second, organize all proof of ownership, receipts from when you acquired the currency, photos of bundles if you have them, serial number records if available, and any bank statements that document past transactions involving these currencies. Third, make sure your personal ID documents are current, government ID, passport, and bank account details. Fourth, avoid posting identifiable photos of your stacks on social media that draw scammers. Fifth, contact your bank only through verified channels, not social posts, and ask about their official procedures for exotic currency exchange if and when the official program is announced. These steps won't guarantee immediate access to exchange networks, but they will minimize delays and protect you from common pitfalls when markets move suddenly. Now let's talk about the kinds of scams that will flood the space when news like this appears. Scammers will offer priority processing, inside rates, or early access to exchange networks in exchange for fees up front or for shipment of notes to unknown addresses. None of those are legitimate. Real banks do not ask for advance fees to exchange currency. They also do not instruct holders to send large amounts of currency to unverified processing centers without a formal contract and clear legal frameworks. Beware of any online post promising guaranteed revaluation rates or guaranteed returns. Another scam to watch for is fake verification services, third-party sites that promise to get your currency exchanged faster for a fee. If a service asks you to pay before any formal bank confirmation, consider it a red flag. The safest path is always to wait for official bank procedures and use only licensed financial institutions. If you're unsure, contact your bank's verified phone number or the central bank's official channels rather than relying on social media claims. How will banks likely verify holdings when any official exchange does begin? Expect standard identity verification plus proof of legitimate acquisition. That typically means government ID, recent utility, or bank statements matching your name and documentation of how and when you obtained the currency. For large volumes, banks often request additional documentation like notary affidavits, transaction histories, or a source of funds declaration. Banks also run anti-money laundering, AML, and know your customer, KYC checks. That's why being organized matters. Having clear records speeds processing and reduces the chance that your exchange will be delayed for compliance reasons. If you have a bank that already offers international currency services, start a confidential conversation with them now so you know what documents they will require. But again, do not send notes to anyone unless the bank instructs you clearly and in writing through verified channels. Let's switch gears and talk about what the market reaction looks like for traders and institutions. When IQD and VND show live data, hedge funds, proprietary trading desks, and banks start scanning for arbitrage, hedging, and position sizing opportunities. They may open small positions to test liquidity, and that testing can appear as spikes in volume or sudden price moves. Institutional players will also be watching for regulatory announcements and central bank commentary that could change the short-term narrative. For retail traders, these early days can offer trading opportunities, but also high risk because spreads may be wide and price discovery is ongoing. If you're not an experienced forex trader, this is not the time to take large speculative positions based only on social media excitement. For institutions, the presence of live feeds means they can start integrating the new currency into risk models, but full market integration requires deeper liquidity and clearer settlement mechanics. If you're a smaller holder, someone with a few thousand in local currency, your options are simpler, but still important. First, avoid panic. The market buzz does not change the physical steps required to legally exchange currency in most countries. Second, prepare a clean set of documents and identify trusted banks that operate in your country with foreign exchange windows. Third, be patient and seek official guidance before transferring notes or engaging intermediaries. Fourth, be skeptical of any private buyer offering to purchase your notes at a premium because that's often how scams or gray market deals are framed. For many small holders, the easiest outcome will be an established bank network making the exchange straightforward once formal announcements are made, but that requires compliance and time. Having paperwork ready makes you a priority candidate for efficient processing when the official system opens. Now, let's address a common emotional reaction: anxiety and hope. Both are natural and understandable. Many holders have waited for years, and sudden market activity suddenly makes the possibility feel real. Emotional decisions, like rushing to sell to the first person offering cash or paying a third party to expedite exchanges, often lead to mistakes. The most powerful thing you can do right now is to take calm, practical steps, secure notes, organize documents, and consult verified banking channels. If you feel overwhelmed, talk to a trusted advisor or a bank officer. Do not let social media hype drive you into risky choices. Remember that legitimate exchange will require legal documentation, verified banking steps. That is where patience and preparation pay off. Let's get technical for a moment, but keep it simple. How do forex platforms actually display a currency like IQD or VND? They pull price feeds from liquidity providers and brokers who post bid and ask prices. Charts are generated from these feeds, showing ticks, candles, and trade volumes. When a currency is new or has limited liquidity, the feed relies on a small number of providers, which can make prices move faster on lower volumes. That's what traders call thin liquidity. When liquidity deepens, more providers post prices, more counterparties are willing to trade. The market stabilizes and spreads tighten. That process is what markets go through in early integration phases. For holders, the takeaway is this: early price moves on charts are part of a discovery process and do not immediately translate to guaranteed exchange rates for retail accounts. What should journalists and content creators keep in mind when covering this story? Accuracy and restraint. Don't chase clicks with sensational claims that banks have officially opened exchange programs unless you have an official statement. Report on what is verifiable, the presence of live feeds on charts, statements from regulated financial institutions, and any communications from central banks. Avoid amplifying unverified claims from anonymous sources. If you cover holder stories, focus on practical advice and verified steps rather than promises. Responsible reporting helps protect holders from scams and reduces market panic, which ultimately helps the integration process proceed more smoothly for everyone involved. Now, let's look at potential timelines and why they can vary widely. You might see price feeds appear quickly, but formal retail exchange availability depends on coordinated actions, central bank policy announcements, bank system updates, international settlement arrangements, and legal documentation frameworks. Some of these steps can happen in days if institutions are prepped, or they can take weeks or months if more compliance or infrastructure work is needed. There's no single universal timetable because each country and banking network has its own processes. So while screens lighting up is an important milestone, it is not an automatic switch to mass retail exchange. The safest plan is to prepare now and expect the official process to follow public, verifiable announcements. Let's talk about record keeping and how to make your application smooth if you expect to exchange currency. Create a folder, digital and physical, with scanned copies of IDs, proof of purchase or acquisition of the currency, bank account information, and any prior correspondence with banks or money changers. If you receive the currency as part of a family inheritance, include legal documents that support that claim. If you purchased it abroad, keep receipts and transaction confirmations, organize serial numbers or photos of the notes. Keep all originals secure but accessible for verification when asked. Having everything neatly presented will speed up any legitimate verification and reduce the chances of delays caused by missing paperwork. If you are considering selling or transferring your notes to a private buyer, think twice. Private buyers often promise convenience and speed, but can be part of a gray market that does not protect you legally. Transactions outside regulated banking channels often lack dispute resolution and legal recourse if something goes wrong. In many cases, banks will refuse to accept notes that have passed through dubious chains of custody. If your goal is to convert legally and safely, the recommended route is to wait for authorized channels and follow bank instructions. If you absolutely must sell privately, consult a financial or legal professional and insist on written contracts and verify funds but know that private deals carry higher risk. Here's what developers and fintech providers are doing behind the scenes when a currency re-enters live feeds. They are testing routing, settlement, and reconciliation. That means running mock transactions, ensuring payment rails accept the currency, and confirming that clearinghouses can process cross-border settlements. These are technical steps that most holders won't see, but they are crucial to prevent processing errors once official exchanges go live. Successful tests reduce the chance of later problems like misapplied funds or settlement delays. From a holder's perspective, these tests are good news. They show that the plumbing is being checked, but they are not the same as a bank opening a retail exchange counter. Now let's address frequently asked questions you might see in comments and posts. Q, can I exchange my notes tomorrow? A, not necessarily. Wait for official bank guidance. Q, do I need to ship my notes to a processing center? A, no, never send your notes to anyone unless a verified bank instructs you in writing. Q, would the rate on the chart be the rate I get? A, market quotes are indicative. Retail exchange rates may differ after fees, and official rates are set. Q, are there official rate announcements? A, yes, official rates will come from central banks or authorized financial institutions, and those are the rates to rely on. Keep answers short and refer people to verified channels. For holders with large quantities, there are extra steps and risks to consider. Large transactions draw regulatory scrutiny for AML and compliance. Expect banks to ask for detailed provenance documentation, tax records, and potentially notarized affidavits. Work privately with a trusted bank officer and consider consulting a lawyer who specializes in international finance if you're moving significant sums. Avoid publicizing large holdings online. High visibility can attract fraud attempts, and large private transactions without legal protection can leave you exposed. Legitimate large exchanges usually involve careful coordination over weeks, not hours. Let's talk about what this could mean for broader market sentiment if IQD and VND continue to show live activity. First, it can increase confidence in the currency's issuance and management if central